All right, well, we'll go ahead and get started. I'm sure a few folks will be rolling in here just a few minutes late. Thank you all very much for joining us here today. I had hoped to be hosting this webinar a good while ago, a couple of months ago, and it's been a little bit since we've all been together, but in a continuation of our Survive and Thrive series, we are here today just before the end of 2020, quite a year it's been. And aptly titled Wins for Small Business. Finally, some long-awaited news that we'll talk through here today. So thank you for being with us. My name is Ryan Weissmuller. I am the president of Fintrepid Solutions. We partner with primarily founder-led entrepreneurial businesses, helping them navigate the challenges that they face as they evolve over time. So certainly gives us an interesting bird's eye view to a lot of what's been going on out there in the entrepreneurial community. And we've certainly been able to dissect how a lot of this relief and changes is going to affect our customers and Main Street USA in general, as well as some of the other things going on in the economy. So what we'll do today, like I said, some great news that I think we can talk through. And the key with all of this is understanding the implications for your business, maybe the companies that you come in contact with. We work with companies across a wide variety of industries, certainly have access to a lot of market data, and I can tell you have actually read many parts of this bill ourselves, and as well as the folks we talk to. So it does give us that unique bird's eye view. And really what we try to do is have a pragmatic approach, how to move forward, how to navigate all this. There's a lot of information that's always just tossed about. I think the thing that's sometimes lacking is what do you do with it? And so hopefully that's something that we can talk through today, give you some information, be quick, be impactful, and really a holistic view and leave you with some actionable takeaways. So that's what we'll do. Jumping right in, we'll start out just talking through some brief market updates. I think some things that are relevant and poignant to discuss. We will go into in a lot more depth the changes from the bill, the coronavirus relief bill that was just passed, which was titled the Coronavirus Response and Relief Supplemental Appropriations Act. That is a mouthful. We will not refer to that again. But the relief bill, we'll talk about a number of those provisions. And then, as I mentioned, what to do with it, some next steps. And we've got a lot to cover today. I'm hoping we have a little bit of time for Q&A, but if we do run out, I want to be respectful of everyone's time. Certainly, I'll have my email up on the screen at the end, and feel free to reach out. We've been getting a lot of emails, calls, etc. already in the last few days. So by all means, happy to try to answer any questions that we can that way if we need to as well. So let's dive in, and first we'll start as what's really going on out there. What's happening in the market? What are we seeing? And one thing that is certainly a change, and again, we've been knee deep in a lot of this shoulder to shoulder with our customers since all this, really the world changed in March. Obviously, there is a new sense of confidence out in the market. Certainly, this vaccine that's been produced in record time has already started to be, disseminated to a large number of people. Again, not near enough to have the desired effect, but certainly in a way that a lot of people didn't think possible. This new stimulus bill, long overweighted, but finally passing and has some broad implications for the economy. Looking at unemployment, which again, if you were to look back 3-4 months ago to see unemployment where it will end the year, I think would have stunned a lot of people based on where projections were. And then interestingly, I just saw some statistics on this yesterday, but actually year to date, retail sales are actually pacing ahead by a number of metrics, what they were in 2019. So just process that for a second. In the midst of this pandemic, in the midst of all this disruption, and certainly this very deep trough that the economy in parts has fallen into, parts of it have already surpassed where we were in 2019, which pretty hard to believe. And I say that there's not to suggest there's not a lot of pain out there, but again, I think we're reminded every day bad news sells. There is some good news out there in spite of all this, so something to bear in mind, and depending on the industry you're in, that could be really, really good news. The second piece I think that is a big change is just stability overall. And I think just about every American, I know I am relieved to have the election behind us, not because of who won or lost, but just because of the troubling experience that was for so many. But what it really ushered in was a clear sense that there was no defined winner. The results really, if you look at it across the board, were somewhat middle of the road. And what that suggests is we're not going to have any wild sweeping changes to either side of the aisle. There's going to be the need to have some bipartisanship to get things done in Washington. And this is irrespective of what happens in the Senate race in Georgia, because even if those do both go to the Democrats, both those seats, it really still leaves the Senate a 50-50 split, which one single change in vote and the dynamic changes. The key impact out of that as well is the financial markets, which is why you've seen them continue to improve, as well as just Main Street in general. The economy doesn't respond as well historically when you have one party in dominant control. So in general, that sense of stability, the sense that the election is past us, hopefully some of that dust settling, good news. On the workforce side, so this is one that is still, I don't know that you could describe it any more than fluid. We've seen a number of businesses, certainly our clients and others we've been around, that have shut offices back down. Obviously with schools reopening, then closing, again, the impact that's going to have. And what does this mean for the workforce environment? A lot of businesses, as we look into 2021, planning for increased costs there, probably a good idea. But that is an ever-evolving piece, especially for teams or for businesses that are really, really dependent on their teams on a daily basis to produce some sort of output to drive revenue. Some critical implications there. The lending environment, and really I'd say the capital environment overall, banks are still lending. They're being picky, but there are deals getting done. We've actually been part of a number of deals here that are coming to fruition at the end of the year or shortly into next year. Acquisition activity is still happening both on the buy side and the sell side. So are things being scrutinized differently? Absolutely. And that is probably something that is here to stay. Certainly in a lot of the conversations we've had with lenders that we work with and our close contacts, they're still expecting to look into really deep month-over-month trends, understanding and really probably scrutinizing the financials and other aspects of the business at a level that they haven't, really scrutinizing projections, for example. That's probably not going anywhere anytime soon. And the real message I think behind that is a lender, a buyer is really trying to understand the why behind what's occurring in the business. And that is something we should get used to. So something to be prepared for, certainly as you look ahead. And then just Main Street in general, I think there is an air of cautious optimism going into 2021. There are certainly a lot of people out there, and I think we could probably all fall in that boat to some degree, that we'll just be happy to get 2020 behind us. And later this week, when that clock strikes midnight on the 31st, we're all ready to usher in a new year and get a little bit of a clean start. But there is some rising confidence in the overall business community. Again, not across all industries. Certainly the restaurant industry, hospitality, aerospace still have some pain that they're feeling and not out of the woods yet, but broad strokes, there's a lot of optimism out there in the economy. And I think the other thing that's, again, going back to what expectations were maybe 4 or 5 months ago, there have certainly been a lot of bankruptcies. You've seen a lot of retail closures. You've seen a lot of impact throughout the economy, but the massive wave of bankruptcies really never came to fruition in a way that many feared. That's good news. Again, not to say there hasn't been pain felt, but the depth and breadth of that pain has been more limited than potentially feared. So let's talk about this new relief bill in a little bit more depth. And there are a number of components to it. We're going to try to cover as much as we can today, and certainly there's a lot more that's going to be coming out, which we'll touch on that as well. But we do know a lot today, and more importantly, we know what to do with the information that we do have thus far. So we'll talk about really the 3 big changes of the bill that impact small business, or the primary ones. There were a number. Changes to forgiveness, changes in really the creation of another set of PPP, another bucket, if you will, of PPP loans. And then tax implications. Those were the 3 real big changes that affect small business. Now, certainly there were a lot of other impacts, increase in unemployment benefits, specific industries that received funding or support. There's talk of the stimulus checks, which in the bill were set at $600 as of the recording of this webinar. There's still some discussion in Washington of taking that up to $2,000. So a lot of other impacts out of the bill itself, but for the purposes of today and the time we have, we're really going to focus on those that are most poignant for the small business community itself. So let's dive into forgiveness first, and a number of changes that are important to understand. I think the thing I want to do today we've already heard it just because of people reaching out to us. I think there was some initial confusion on what applied to old, what applied to new, what happens next, what does this look like? So we'll try and touch on as much of that as we can, but really what I want to try to stay focused in is fact, what we do know now. The key thing I will say about all of this is the SBA primarily, who handles a lot of these programs, is going to be issuing new guidance as early as, some of it will come out as early as next week based on what the bill states. They have between 10 days and I think the outside 24 days to publicize some of the changes, regulations, guidelines, et cetera, for the exact minutia and detail in all these programs. But we do know a lot based on the meat of the bill. So one big change, and this applies, again, this is focused on old PPP loans, the first waves, if you will, of PPP loans. And that is what is now considered an eligible expense. So that has been broadened to include things like operating costs, which would include things like accounting, HR, IT systems, supplier costs. So costs that were incurred prior to the loan being funded, those are actually able to be used and paid. Worker accommodation costs, so changes that have had to be made, for example, whether that's protective equipment or other changes, for example, to make an office environment more conducive. Those are all now allowable costs. Now the ratio still has to be 60% payroll, but in that other 40%, which used to be rent, mortgage interest, et cetera, you can now factor in some of these other allowable costs. So for a company that maybe hasn't recovered all the way from a payroll perspective, that's another way to make up some of that ground and achieve a larger dollar number of forgiveness. The second key point is that for small borrowers, and where the bill defined this was for $150,000 or less loans, PPP loans of that size, there is now a vastly simplified forgiveness process. Now, I will tell you, this was something we were hoping that dollar amount was going to be a little bit higher, but even at the 150, that's still going to have a very significant impact, because I saw a statistic on this that's expected to cover about 87% of the volume of loans made, not the dollar volume, but the volume of loans made fall $150,000 or under. And basically what is involved in that process is there's a one-page certification form that will be released by the SBA. We don't know what exactly is going to be in it yet, but a one-page certification form that will need to be filled out. There will not have to be any kind of supporting documentation provided with that certification form, and that is what will be needed to submit to the bank and then on to the SBA for forgiveness. Now, the caveat to that is it can still be audited. So companies are required to keep that information, any supporting documentation that they would otherwise submit, they're still required to keep that on hand. Most of the information for 4 years, some of it for 3, but at least have that on hand in the case that an audit were to occur. Now, really the one piece I would say of not so great news in this bill, or something that was talked about and hoped for, was some streamlined forgiveness for loans above 150. And we did not see any change out of this bill to those larger loans, which again was the vast majority from a dollar perspective, as you can imagine. And really there are two buckets. So the loans between 150 and 2 million, and then 2 million and up. And the 2 million and up loans are going to see the largest majority of scrutiny. Those are guaranteed to get a more thorough review by the SBA. And also involved in those is really a certification of the need for the funds. So from what we're seeing, and there was an FAQ on this that the SBA released, I believe, a couple of weeks ago, is that they're really looking into not just could a company qualify for that PPP loan, but did they truly need it? So if a company went out there, got a $2.5 million loan, even if they spent all those funds on payroll, but maybe saw no dip, and there's no guarantees on this yet, we don't know, and I am not aware yet of a business that's run into huge forgiveness issues of that size. But there seem to be suggestions that those are going to be scrutinized, and that they're really going to be looking where there was a true need for those funds, as opposed to businesses who might have taken them and not really needed them, even though they spent the proceeds. So something to watch very carefully. I would certainly say if you are in a situation where you find yourself with that aggregate of 2 million or more, make sure all your ducks are in a row, be very, very thorough, try to make it as easy and the documentation as clean as possible. That will help your cause. And then just be prepared to defend why that money was necessary. So that's the forgiveness side. Let's jump over to round 2 of the PPP. And we'll spend a little bit more time talking in this area because this was really a brand new program. A lot of similarities to the old PPP, but some new changes. And really the biggest thing is on the front end. So basically what this bill did is created a new pool of funds, $284 billion allocated to what a number of people are just calling PPP2. And to be eligible, now I mentioned when information was going to come out. This is the piece that we expect. I believe the SBA has 10 days from when the bill went into effect. So we should see that, I think, towards the latter part of next week. Exact guidelines on this PPP Round 2. And our expectation is the banks, this will again, much like the first round of PPP, will go through your bank, that they will start taking applications sometime in mid-January at the earliest. It will probably take them a little time to get set up, so it could be a little later than that, but we are expecting that this is going to happen fairly quickly. The primary difference between this round of PPP and the original, and for those of you who already went through it, there were not a ton of questions asked up front. It was a very quick process. Again, the goal was to get those funds out in the economy as quickly as possible. And by all accounts, you can say what you will about the program itself. It did solve things in that regard. Was there abuse? Yes. Was it lumpy? Absolutely. Could there been a lot of things done better in hindsight? 100%. What I will say, at least from my perch, is that was life-saving to a lot of businesses that might not be here today otherwise. But the difference this time around, and I'll categorize it just simply by saying companies are going to have to really prove the need. So one thing we know is that a business is going to be eligible if they can prove that they had a 25% decline in revenue, in gross receipts, from a quarter in 2020 compared to a quarter in 2019. And one key distinction here, and this language is very clear in the bill itself, so let me address this because I had this actually asked of me. It is calendar quarter. You don't get to pick what is defined in that quarter. So Q1, January to March, Q2, April to June, etc. It is by calendar quarter. So Q1, Q2, Q3, Q4 compared to 2019. If there's a 25% revenue decline, that business would then be eligible. The other key is that the prior PPP funds had to have been used up. So the first PPP loan had to have been spent already to be eligible for the PPP2. And we do expect in this guidance that there's going to be some other attestation, not knowing what that's going to be involved. But again, they want to be very, very sure, the SBA, the government, that the potential issues for fraud are greatly lessened this go round. So we are firmly expecting, based on what we've seen, and even just hearing some of the chatter in Washington in following a lot of the movements of this bill itself, as well as the SBA's stance, that there are going to be some fairly strict attestations to prove an actual need. So for example, a company that maybe took a real big hit in Q2, but then had a record Q4 and is just swimming along, how that factors into the evaluation of eligibility for the loan, it very well could. And the other thing I will remind everyone about this program, because it's going to be bank driven, and we had our hands in one way or another, I think, in well over 30 of these, every bank did it a little different. So the package that they're going to request, how they're going to review things, who you're going to be in contact with, that's really going to be a function of the bank you're applying with. So definitely a good idea. They're not going to have the information tomorrow. I think they'll have a lot more as it gets closer to the SBA releasing all of this, but a very good idea to stay in touch with your lender and to try to get as much information as you can when it's available on how exactly they're going to approach it. Couple other just key criteria, the max on employees, because some of the limits have actually come down. In the original loan, I think it was up to 500 employees and $10 million loan size. In this round, it's under 300 employees and a $2 million loan max. And really what they're trying to do, the government was really targeting this towards the smaller businesses, the ones that were harder hit, because certainly a lot of the larger loan sizes were the ones that took a lot of scrutiny. You know, a number of public companies or companies that maybe to the outside world seemed a lot healthier were getting these large dollar amounts. This is very much focused on that small business community at the $2 million level. The formula for calculating is very similar, and there are caveats to this. So in certain NAICS codes, the restaurant industry, for example, the formula is actually up to 3.5 times monthly payroll, but for the vast majority of businesses out there, the formula is the same as how we calculated the first PPP loan. It's basically 2.5 times, or roughly 10 weeks of an average payroll. And again, the calculation for that, we'll see exactly how they want it defined when you go to apply with your bank, or if the SBA releases specific detailed uniform guidance. But that's the general rule of thumb, is again about that 10 weeks of payroll is going to be the max loan amount will be the lesser of 10 weeks of payroll, or a $2 million loan limit. And then much like the first round of PPP, it's the same 60-40 split. So 60% of the loan to achieve forgiveness would be based on payroll. And then the other 40%, just like the first, can include mortgage, interest, utilities, rent, et cetera, as well as those other approved expenses that I mentioned earlier, the other operating costs, workplace accommodation costs, et cetera. The other key point of distinction here, and we'll see how the guidance shakes out, but this was very clear, is that the borrower is able to pick the coverage period. So the original PPP loan, you had 8 weeks, then they extended it to 24, which really should have granted forgiveness to the vast majority of businesses out there who had recovered in some regard. In this PPP2, you're allowed to pick, if you want it to be 10 weeks, you can, 16 weeks, anywhere between 8 and 24, that is at the selection of the borrower. And then one other piece that I'll just point out is this program does also allow for reapplications. So let's just assume that because of changes to the program, or because of the way anything is calculated, you would now be eligible for maybe 20% more money than you got under your original PPP loan. You can actually go back and apply for that 20%. So really a lot of options here around this second round of PPP. Not perfect. We'll see how the rollout, the hope is certainly that banks are a lot better prepared for this, because they were just overwhelmed with a deluge in the first round of PPP, as so many of us remember. But this program really should get targeted funds to the businesses who were hardest hit, and we'll look to see that rolled out here hopefully as soon as possible, and we're certainly preparing for that process to arrive here shortly. So let's jump to the last piece, and we'll jump through this a little bit quickly, but there were some key changes on the tax side as well that we'd be remiss if we didn't discuss as well. And the first big one, which is the one that was garnering so much press, and really between the back and forth with the IRS, the Treasury, and so many business advocacy groups like the U.S. Chamber of Commerce, was this issue of deductibility of PPP expenses. So under the prior guidance issued really by the IRS, a forgiven loan, so let's say you got a $500,000 PPP loan fully forgiven, that $500,000 was not treated as income for tax purposes, but then you previously were not allowed to deduct the $500,000 of expenses that loan loan proceeds were used to pay for. Now what has changed is this bill specifically delineates that any expenses used with proceeds from a forgiven PPP loan are tax deductible. So the real great news of this, and we were certainly experiencing this with some of our clients, is the ones who had made it and had gotten to this point and were now really trying to position themselves for success on the other side, were potentially, had spent that money on payroll, on reinvesting in the business, on getting themselves reestablished, but then we're going to face a tax bill next year because of not being able to deduct those expenses and not necessarily having a ton of cash on hand to pay that extra tax bill. So this solves that challenge. It's very positive. I think the impacts of that will be pretty widespread, and that is something that certainly, as it's understood, will be a nice boon on a lot of fronts. But, and this is the big caveat from a but perspective, it does potentially create some taxation issues. So for certain businesses, they could have a problem with their basis. It also creates at least a worthwhile discussion on how to treat forgiveness. And I'll touch on this just briefly, but there's really two methods that are being discussed. One whereby if you can reasonably expect forgiveness is going to occur, to go ahead and take the forgiveness income and the expense in 2020 before the year ends, even if you have not applied for forgiveness or received it. The other option would be to wait until that occurs. The issue you run into there potentially is you've got income in one year, the expense in another year, and it can create some issues. So that's definitely a worthwhile conversation with the CPA before making that final decision. We're working through that with a lot of our clients right now. So in general, the best way I can categorize that, it's positive in terms of treatment, it's positive in terms of keeping dollars in those small businesses, but not to say it's not without some other complexities that are tangential as a result of it. The second change, and this is by no means exhaustive because there were a number of tax changes, I'm just trying to highlight the primary ones and the ones that really impacted small business, is that there were a number of payroll tax credits. So under prior legislation, you basically had to choose. If you took the payroll tax credits, you couldn't get a PPP loan and vice versa. Now what they're allowing is that you can do both, and this is retroactive. So companies can go back, again, have a conversation with your CPA to see what the impact of this is. As I mentioned at the outset of this webinar, it's very important to look at your individual business in making decisions, not just assume because your neighbor is doing this that it makes sense for you. There's a lot of implications, a lot of considerations. But for many businesses, it will make sense to go back and retroactively take that payroll tax credit in addition to the PPP. So it's another chance just to get additional relief. And then the last one, which was a bit under the radar, but actually meal expenses, so food and beverage expenses, which again, under past legislation were deductible at 50% for 2021 and 2022. And this is another point of confusion. I had some folks mention to me they thought it applied retroactively. It does not. So 2020 is off limits, but basically any food and beverage expense incurred between January 1 of 21 and December 31 of 2022 is now 100% deductible instead of the 50%. Really twofold, I think. The intent there is to try to get spend in this beaten down restaurant industry, but also to provide some benefit to employers out there who get the tax impact of that. So we've covered a lot. We've done it quickly. I want to try and wrap things up here with really what do we do with all this? So let's talk about what this all means. And the first thing is both literally and figuratively is the shot in the arm. In the case of the vaccine, that's going to be for most people 2 shots. But you know, we've got the vaccine and kind of the confidence from that. We've got this stimulus, which again has broad impacts, and really I think the key there is to just watch closely what happens with that, and really try to see what happens. Again, not for those of you who have heard any of my webinars, I'm not a fan of watching the news. I think you can get, you know, sometimes the headlines are not the right impression, and I'm a fan of data on what's really going on, regardless of what that tells you. But watching what happens with confidence, if the virus, you know, really starts to get distributed fully, you start seeing cases either calm down or certainly get less severe, and we start seeing this stimulus flow through the economy, where again spending ticks up a little bit, unemployment stabilizes. You know, we see businesses start to maybe grow again in 2020. That's going to be a very, very interesting piece to watch of just how impactful is the shot in the arm, both for the businesses figuratively as well as literally for all of us humans who are trying to protect ourselves from this terrible virus. The other thing I think it's going to be very interesting and important to watch for, and again, we have to go back and look at the lens of the last 4 years or so. For many businesses, up until March of 2020, the economy was phenomenal. In an historical perspective, the economy really was, but we were burdened by a lot of gridlock, a lot of fighting, just a lot of teeth pulling to watch, quite frankly, what was going on in Washington. With the changes I mentioned earlier, and even if you look at it, just the bipartisan nature of coming together on this bill, some of that gridlock has to loosen, and some of it already has. There's talk of an infrastructure bill. There's talk of other things coming up that are going to require bipartisan support. That's good for us in general as Americans, but it's also good for small businesses. to have a more of a functioning environment in Washington where things are actually getting done. So again, something to watch there, and certainly industry specific. For a defense contractor might be very different from someone in aerospace, might be very different from someone in a service business, but watch those impacts and what it does in your business, your industry. The other thing I will say though, and it's important to point out, and I mentioned this with the retail numbers, the US in general is in pretty good shape, all things considered. Certainly much better off than the rest of the world. And so I think that's one key piece to really look at, is how dependent are you on other parts of the world, and where, where is that dependence really centered, and how healthy are those countries, whether it's customers or supply chain. It is very clear that regardless of who won the election, as far as the White House was concerned, this trend of nationalism was going to continue. We are seeing more jobs, more production, more manufacturing come back to the United States. So, the outlook for the U.S. Is still fairly strong. And looking at a bunch of the economic data, certainly that we subscribe to and see, there were a number of economists that were thinking a slowdown was coming, and a fairly painful one in maybe 22, 23. We ripped that Band-Aid off and did that early. So, we're also in obviously a low debt environment, or low interest rate environment, I should say. There's a lot of tailwinds that could potentially support the economy in a good recovery, and even saw something yesterday that there's some predictions in early 22 of actually being back above the 2019 levels, where we really saw some of these, all-time records. So US in general is in good shape. The last thing that I would say on just how to interpret a lot of this, I'm a fan of metaphors, the sturdy sailboat. Imagine that your business is a sailboat, and you want to build it to withstand a storm, because the thing that this has taught us with all the twists and turns is we don't know what's coming. We don't know when the storm is coming. We don't know how bad the storm is going to be. And we've also seen how these storms can materialize out of nowhere. So being ready to tack and turn into the wind when you need to, be ready to ride that wind and really unfurl those sails and take off, when you can. But the key to it is being nimble, being responsive, being able to have that fluidity within the business to navigate, whether it's a stormy sea or a very calm sea, to be able to navigate in the best way for the long-term success of the business. So let's talk about, as we wrap here, some key takeaways and what to really do. Again, the goal is, there's a lot of information we put out here. You can go read, and just like I've done the last few days, you can spend a lot of time reading through all the information is out there. But again, we want to hopefully help leave you with some takeaways on things you can go start doing tomorrow, next week, next month, to really move things forward, because no time like now, paralysis is very dangerous. And there are companies out there that are grabbing the bull by the horns right now and taking advantage of it, and really looking to roar into 2021. You want to be one of those if you can. So the first piece, and this really relates to this next wave of PPP, assuming it applies to your business, is just be ready. We're already, I was actually talking to a client earlier today where we're already working on the calculations and trying to figure some of the impact, as well as even starting to collect some of the information that we're sure we're going to need in that application process. So, talk to your bank. Again, I wouldn't call them tomorrow. They're not going to know anything yet, but pay attention, look for when that guidance from the SBA comes out, and then reach out to them and understand, even before that, you can reach out. Just, what do you think your process is going to be? They've probably talked about it. The good news is they have these portals set up. They've got at least some process in place. So this should go a lot smoother than it did the first time around. But you want to understand what might be involved in that, because the thing we don't know is how long these funds are going to last. Now, certainly because they made it needs-based, we expect that fewer companies are going to apply, fewer companies are going to qualify. But this money could still go fast, and many people, myself included, expect that there's going to be a bit of a rush to get these proceeds quickly. So watch for that guidance. As I mentioned, some guidance will come out towards the latter part of the next week. I think the last bit of guidance has to be released according to the bill by January 20th. So a lot is going to happen in that first month of 2021. The second one, and I cannot stress this enough, is get in contact with your CPA. One mistake we see just categorically is a lot of companies aren't talking to their CPAs before the end of the year. It's not tax time yet, I get that, but what changes might you need to make? What are the things you need to be thinking about? Doing some proactive planning for the following year. But especially with these changes and understanding the impacts, there's so many implications for both 2020 and 2021. What makes sense for you? How does it affect you? I brought up some of these basis and other issues. You don't want to unwittingly create a problem for yourself tomorrow because you haven't asked the right question or provided the right answer today. So reach out to the CPA, understand what the tax implications are, have a good roadmap, and really try to get things as clean as possible from a slate perspective going into 2021. The third piece, and I touched on this, but I'll just reiterate it. These larger loans are going to undergo some scrutiny. One thing that was in the bill specifically is an additional $50 million in funding for auditing of these loans. We already know that the big ones, 2 million and up, are going to get a lot more scrutiny anyway. It would not surprise me, and we've seen it earlier in the process with PPP loans, that they may look to make some examples out of some folks. So make sure you have your ducks in a row. If you're concerned at all about being something being questionable, do everything you can to justify, have all the supporting documentation available, have your ducks in a row. In worst case scenario, for some businesses, they're going to find out. We do know that there are some applications out there that did not receive full forgiveness. We're aware of a number. I mean, the ones that we've been personally close to have all gotten full forgiveness, but we're aware of some that haven't. Be aware of that. It can happen. It's out there. So the best thing you can do is just be prepared, especially in those larger loans, and definitely everything 2 million and over, but even that 150 to 2 million, it's going to get a level of scrutiny. Another kind of unrecognized aspect of this is in looking at this bill, what's the impact on your customer? So if you're a B2C business, for example, does this direct stimulus help? Do these unemployment proceeds help where your buyer has a little bit more money or a little bit more confidence, maybe even just from what's happened with the vaccine or the economy or some of what we've talked about? For B2B businesses, even if this PPP money, for example, doesn't apply to you directly, maybe you're someone who serves the restaurant industry. Maybe you're someone who serves some of these hard-hit industries that this bill directly helps. What does that mean for your business? And I think really stepping back after having a chance to digest this and trying to understand the impact on your customer and how you best serve them, they may have more money now, and just looking for support and how to best utilize that capital. You could be the answer. And then the last thing I would say, and this is something for anybody who again has been around us for any length of time, we are fans of multiple forecasts, and especially in times of uncertainty. So right now, I would say, a good best practice is for 2021. A lot of companies are going through their planning processes right now, a low, a medium, a high, understanding how you're going to respond based on certain scenarios that could occur. Nothing wrong again with having a budget, but there's situations where, if you don't come close to hitting that budget, let's say this second wave gets much worse, or the flip side, business is so great that can create challenges as well. Have those multiple forecasts, because that's also a great thing. We talked about this with talking to your lender as well. Something great to put in front of your lender. This is what we think our forecast is going to look like. Talk about next year. It's important. It will help you. So we've covered a lot. This webinar went a little bit longer than the ones we've done in the past, but there was a lot to cover. Thought it was really important. We jammed a lot in this session. We don't really have time for any questions today, but as I mentioned, my email is on the screen. Feel free to reach out at any time. We're here to help, to be a resource in any way that we can. We're all in this together. Enjoy the time that we have today. I'm sure we'll be talking again in 2021. Have a wonderful new year. Thanks so much for joining us. Stay safe, stay strong. We'll talk to you soon on the other side.